Thanks for clicking! Canada's real estate data is out for the month of September, with the Canadian Real Estate Association seeing major upward momentum in sales, with home sales reaching a 4-year high for the month of September.
This recovery is only just getting started.
Yet this data, and as we'll see, these comments from CREA economist Sean Cathcart, comes as Royal LePage, the same Royal LePage that was brave enough to predict a Toronto housing market boom less than a year ago, is now telling us that prices are expected to fall for the remainder of 2025.
My daddy and mommy are fighting.
So what I want to do today is go over Canada's national real estate data for the month of September, as well as the CREA interview with Sean Cathcart, take a look at the report from Royal LePage, and then discuss what to look for next. Speaking of next, we do have a big couple of weeks ahead of us, with Stats Canada set to release Canada's inflation data for the month of September next week. And the Bank of Canada is set to make its policy rate announcement, with a press conference held thereafter the week following. We will obviously have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features, which did fall in September, coming in at $686,800, down from the previous month's $687,600, and down about $25,000 from the year prior. Sales were down month over month, but as articulated by the CREA, they were up from the previous 3 Septembers. Incredible, isn't it? This month, the CREA knows that the proper way to assess sales numbers is year over year, as different months are going to have different sales. You wouldn't compare November to December, but last month, they didn't understand that premise so much.
So Canadian home sales overall were up 1.1% from July to August. That's the 5th consecutive increase. That's a trend.
Yeah, and then this month.
So in September, home sales fell 1.7%. A small decline, but it was the first one in 6 months, like you mentioned. Probably markets just taking a breather.
Okay. Regardless, sales are indeed up 5% from last September. With that said, this month, the CREA isn't being explicit about the new listings numbers, not like they did last month. Rather, this month just giving us quarterly annualized data. So it's difficult to put the sales into context. With that said, the sales to new listings ratio, which is the measure of a balanced market, was down. So there is a good chance that there was an increase in new listings in September. But for some clarification on the market, let's turn to the CREA economist extraordinaire, Sean Cathcart.
Recovery is only just getting started. So this is that supply shortage story that never went away, despite the last quiet few years. And it's sort of sitting there ready to get going again. It's one of the reasons why prices haven't really fallen that much in the last 2 years.
What? Prices are down nearly $60,000 from 2 Septembers ago, back when Cathcart was telling us about low supply, huge demand, and that rate cuts would be the savior. And then next, this guy.
Sort of been mostly steady for about a year and a half now, save for a bit of weakness at the beginning of this year when economic uncertainty was sort of peaking, but that's in the rear view.
Well, there you go, 3,000 people from Brampton. The CREA says economic uncertainty is over.
That's good enough for me.
And then finally, prices could very well be heading up, says Cathcart.
And I think, if sales keep rising the way they have and if supply falls, as it has been doing, we could be just a few months away from starting to see some upward pressure come back into the price side of things. We'll see.
Okay.
Things continue to move in the direction they have been. We could start to see small gains as early as August. Maybe September, October, especially September if the Bank of Canada cuts interest rates.
And again, what on earth are you talking about? The months of inventory measurement has remained unchanged for the past 3 months. The sales to new listings ratio is falling. That's not declining supply. Regardless though, as we've seen today, according to the Canadian Real Estate Association, this could all be early signs of a surge in real estate activity, of a real estate takeoff.
Sales to be up 7.7%, that's pretty decent, but as we mentioned, that's already well underway. So part of that's baked in. And we're expecting prices to be up 2 to 3%, depending on where you are in the country, what measure you use, but basically in line with inflation. So unless we get another black swan type event, looking like that recovery year is going to play out in 2026, and already a lot of evidence that that's sort of underway.
So we've got marginal increases in the number of sales for the month of September, up about 5% since last year. We have prices continuing to drop, though marginally for right now. We have what appears to be a relative increase in supply, despite what we're hearing from the Canadian Real Estate Association. And the CREA, Sean Cathcart, is once again, calling for a real estate takeoff that could be happening over the next few months.
exactly 3 weeks before Christmas.
And yet, Royal LePage isn't being nearly as optimistic, telling us that home prices are only going to increase by 1% between the fourth quarter of last year and the fourth quarter of this year. With so much inventory sitting on the market, Royal LePage CEO Phil Soper is admitting, much I'm sure to the chagrin of his agents, that for the first time in a long time, buyers have a lot of negotiating power.
I don't know what to do.
Yeah, I was under the impression that Canadian realtors were the best salespeople in the world when money is free. Shouldn't these titans of the sales world just be able to hold the line on prices? Or is Soper suggesting that the price of a thing is directly related to people's ability and willingness to buy that thing?
Is this true?
Now, when looking at Royal LePage's prediction of that 1% year-over-year increase, let's also keep in mind that Royal LePage does not measure prices in the same manner as does the Canadian Real Estate Association that uses the benchmark price. Instead, Royal LePage uses what they call the aggregate price, using data collected by Real Property Solutions. Using this metric as opposed to the benchmark price, that leads Royal LePage to think that the national aggregate price has only dropped by about 5% since the pandemic peak in spring of 2022. In contrast, if we use the benchmark price, we'd see that difference was more in line of 20%.
I don't know why you're getting so upset.
So, when Royal LePage expects home prices to only go up by 1% year over year, that tells me that they expect the price of the home that the rest of us uses will be skewed much lower. Regardless of the exact number though, this downward forecast coming from Royal LePage is actually a fairly big shift. This was the same Royal LePage that told us the market was in recovery mode almost exactly a year ago, with an expected return to stability back in December of 2024, even after Trump's election, despite all of the evidence to the contrary. You get the idea. If Royal LePage is telling us that the market isn't about to take off, then the market probably isn't about to take off. As such, Royal LePage is 100% correct. Buyers have a lot of negotiating power right now, and probably will for some time, which means not just finance conditions and home inspections, it also means under-ask offers. There's a ton of inventory on the market. Buyers can use their negotiating power. If your realtor tells you you can't insult the seller by submitting an under-ask offer, drop that realtor as soon as you possibly can and get one that's taken his negotiation course, as mentioned on Real Estate Magazine. They don't have to take the course, I'm just saying get one that knows what they're doing.
Help!
So, home sales in Canada up from last September, though last September was a fairly dismal month. The data is showing that the market probably isn't taking off anytime soon. The MOI is the same. The SNLR is dropping, yet the CREA says that we could be expecting a recovery in short order. Contrast that with Royal LePage, which is saying something very, very different. With that said, interest rate cuts coming from the Bank of Canada probably would help at least marginally, and that will be partially influenced by next week's inflation data, and we'll obviously have an update out on that data on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.